Hello traders, my name is Grega Horvat and welcome to a new video here for the week ahead. As always, I will walk you through the majors after some very interesting developments last week. So, looking at the euro dollar, it's still very tricky pair. I mean, you can clearly see here that market is in a very deep downtrend here, but still it has a lot of overlap. So, in my opinion, I think that bears are losing strength and that sooner or later we will see a reversal higher for a correction. However, this may not be the case until we see this red trend line resistance broken. So for now I would leave euro dollar on the sideline because I think that there is much more better structure, for example on cable. So on cable, what we have here is a completed 5 waves of decline right there, and then you got a 5-wave rally and now a pullback. And this pullback, we called it last week that it could come all the way back to this wave 2 area at 1.2 to 30. Why? Because there was an extension for a wave 1. So usually when a 5-wave cycle with subwave 1 being an extended leg, you will see a retracement in 3 legs, not only back to the area of a former wave 4, but much deeper back to the area of a former wave 2, and this is exactly where recent bearish move has slowed down. So in my opinion, we may see a continuation higher. However, the 61.8% can still actually be retested before real bulls come in play, but generally speaking, I think that wave C could be in the cards. Also, looking at this technical picture, we can see that there was some interesting bottom candlestick formation right there at this this is 200 moving, no, it's a 50 period moving average, sorry, while we have the RSI at a 50. So normally when you are in new uptrend and you see a pullback, it's ideal for RSI to come back to the 50 on this correction, and this is exactly what has happened. So as long as we are above 50, there's still a chance that we will stay in this uptrend. So if cable is going to be trading higher, while the euro dollar could actually be maybe just trapped in a sideways price action, we may have some interesting developments for the euro pound. So looking at the euro pound weekly chart, firstly we spiked up to this level before reverse lower. So it looks like that this reversal can be part of this still ongoing red wave B, and this wave B, as you know, could actually go and retest this former swing low. So looking at the daily chart, it's not a surprise actually for me to see some aggressive downtrend after this very nice broken trend line support. We also came down, even took this wave for swing lows out. So I think that we are now just pausing here, making maybe a flag formation before we see a further weakness. Looking at the 4-hour chart, it could be a wave 4, okay? This was wave 1 leading diagonal, wave 2, and then you have wave 3. And what is probably the most important about the current development is that you have a lot of overlaps within this uptrend, okay, uptrend channel. So I think that this is just a correction on the way down. We also retraced for 38.2%. We could see a 50%, but definitely not 60%. There will be very rare occasions when you will see wave 4 going all the way back to 61.8%. However, in the validation level is at 90.13 level, and also what is interesting is on this chart. Okay, so what we have here, well, I can see euro pound moving into some very interesting resistance zone. You can see that I just labeled the pullbacks with different colors, and each color represents the length of a pullback that euro pound did in the last year. So actually what I noticed is that pullbacks were normally from 120 pips up to 240 pips. Okay, so that was the length in pips of a pullback. So if we respect this type of a pullback, type of a retracement, then actually this could be a very interesting zone of a reversal to the downside, which means if we are in another pullback, then either this pullback will be will stop somewhere from 120 pips to 240 pips measured from that low, and you will come out with a very nice resistance zone right there. Okay, and what is interesting is that even if we see a pullback of 240 pips, okay, we should not go anywhere above this 90 psychological level. Okay, and this is very interesting because that's also the area of this wave 1. So in my opinion, this could be a very interesting zone for potential sell-off, and I would really not be surprised because, as I said, there are plenty of overlaps already indicating that this is not an impulse but rather a correction. Now let's take a look on Aussie dollar. Now Aussie dollar is in downtrend, no doubt, and we think that this downtrend will actually resume after any very big corrective recovery, but before we may see any strong recovery here, I still think that there can be a retest of another retest of 2019 lows. Actually, what is going on right now is that I'm tracking here an ending diagonal, and as you know, ending diagonal, each leg should be made by 3 subwaves. So I'm thinking that we are now just in a pullback of this 5th wave, and that we'll still see more weakness, but after 3 waves of recovery. Here on a smaller time frame charts, I see prices in a wave A, wave B, expecting wave C. So 61.8% would be ideal, which also comes in around this former swing low here, swing high here at 68. So Aussie for now is bullish because it looks like it's turning impulsively on a smaller time frame, but this can be just first leg of a minimum 3-wave rise. So I would pay attention to this pair and looking maybe for even for some shorts if we see, or after we see a nice 3 waves of recovery. Why thinking that Aussie dollar could continue lower is because of Hang Seng Index. There was only a 3 waves of recovery that filled gap. We see a very strong reversal, even broken trendline support right there. So I'm thinking that more weakness could be coming, which means that Aussie could stay under pressure. But as I said, after these 3 waves rally. Now looking at dollar CAD. Dollar CAD on a weekly chart still in uptrend, and I think it will stay in uptrend because this recent big reversal from those 2018 highs was in 3 waves, and we bounced so far very nicely. So I'm thinking about more upside. Okay, we could easily be at this swing high by the end of the year. Now looking at the 4-hour chart, we have higher swing lows. So I'm thinking that we are already in a phase where market will go and retest these September highs. So far we have seen a very nice aggressive move to the upside, and it looks like this leg is much more stronger and sharper compared to the first leg. Okay, so ideally we are already in a wave 3. However, the key will be this pullback. Okay, if we really are headed much higher from here, then this pullback should be corrective on the smaller time frames and should not go anywhere deeply below this trend line. Okay, so this trend line support must limit the current pullback in current weakness. Okay, so if we'll see a bounce from there, then I really think that we are in a stage for much higher prices. Now if maybe suddenly, that's of course position dollar CAD to looking for more upside in dollar in general. This could be very interesting if dollar in general will stay strong, which means that you will see dollar index again turning back to the highs. If that would not be the case, then my main attention, I mean, could be here on dollar Swiss. Why? Because we are recovering, okay, but in overlapping price action we have these contracting trend lines. So I'm thinking that markets are actually waiting for this volatility to come back, and actually this could be to the downside, especially if we consider that this could be a flat correction. 3 waves up for a wave A, 3 waves down for a wave B, and now you have this ending diagonal here for a wave C, which actually moved to this very interesting resistance zone around parity here. So looking at the daily chart, you can also see that we retraced for 61.8%. So if dollar is really headed to the downside, then this dollar Swiss is probably one of the best pairs that I would take a look at, especially once we broke this trend line support. Okay, we tested 3 times now. Maybe if another retest will occur, then I really think that maybe the breakout will be pending. Okay, now let's take a look on dollar yen. Now dollar yen came to the downside because of the 10-year US notes that rise. So actually what is going on? Well, I see so far only 3 waves of a pullback from these highs, from September highs, and 61.8% to 50% is definitely the FIP level where I would pay a lot of attention. However, it looks like that another retest of these levels, of these FIPs, will occur because the latest bounce you can see here on the hourly chart was only in 3 waves. Okay, so I'm thinking about maybe to clear some stops down there, and then I would be paying attention to potential rise here. Also, if dollar if maybe I'm wrong on this one and the 10-year US notes will just move straight to the upside, okay, then I think we should pay attention to gold, okay, for more gains. Why? Because it made a very nice pullback. Actually, I have been bearish on gold. I expected this third leg sell-off. I didn't know if I should look for a wave 3 down, very strong decline, or wave C. But we were at the decision point in the middle of last week from where market bounced very sharply to the upside, and you can see that we reversed up from this lower trend line support and also from these previous swing highs there. So in my opinion, there is a chance that gold will stay in this uptrend. Also, looking at the 4-hour chart, there was a 5 waves of recovery, okay, from this trend line. So at least another leg higher is coming after this correction. So I'm thinking that 1535 will be retested, and ideally even 2019 highs will once again occur before market makes a very strong significant reversal to the downside, because that would complete this 5-wave cycle from May. Also, looking at silver, it's not really clear. We have 3 waves of decline right into this support. So if we go back to 18.74, then this would be actually doors for $20 here. If suddenly we broke this support, this recent swing low, then I think that even more weakness could occur. So it's like a sideways, but gold has a much better structure in my opinion. Let's take a look what we have next. I will take a look on crude oil. Crude oil came down to very interesting zone. Okay, here's the daily chart. we tested this trend line support, and it looks like that we are trying to reverse away from it. So maybe we are still trapped in the middle of this triangle. Wave E is still missing. However, this was a very quite strong reversal, okay, after this gap higher and higher prices, and then we even filled the gap. But notice that this gap didn't cause any change in the flows. We actually continued sharply to the downside. However, it still might be a wave D, but from a trading perspective it's very tricky because it's still downtrend in progress. I do not see any signs of or evidences of a bottom or completed wave D yet. But if we suddenly see a strong push to the upside next week, and if 54.40 will be broken, then I really think that more gains will come here for wave E. So it's very important to keep an eye on this trend line and this swing high. Okay. Now let's take a look also on the S&P 500. Now the S&P 500, as you know, came to the downside very aggressively here last week, but it recovered on Thursday and Friday sessions. So this is now very exciting. Why? Because what market done is actually it closed higher on Friday at the highs. It finished and reversed all and erased all of the losses that occurred in days before Thursday and non-farm payrolls report on Friday. So in my opinion, bulls are now in the lead. And also what market done is it made an overlap with 29.45. This is a key, because even if you are bearish, okay, and you expected market to make 5 waves of decline, obviously prices in a wave 4 then should not trace into the territory of a wave 1, not to mention to close it that zone. So that was the wave count that I was tracking. Okay, I thought that we are maybe in a wave 4. I waited on a reaction from here for potential sell-off, but it didn't happen. Market just moved through this level, so it looks like the discount is now invalidated. So we should really be focused on more gains. And looking on daily chart now, maybe we are here in the middle of this ending diagonal, which means that we could see a retest of the highs once more. But again, I would not be looking for nothing significant really. Just be aware of failure move at the highs and then reversal back to the downside. Same thing happened actually. Let me just put this in. Okay, same thing happened actually each time when market moved to a new high, it reversed very quickly. Okay, you can see here. So I would not be surprised if something similar will happen once we reach a new highs once again. Okay, so the S&P 500 I think can be headed higher. I personally will watch this pullback. Probably it will occur either now from a trend line of resistance or from this swing high. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon. Bye.